In a world where financial freedom and independence are sought after by almost everyone, we often hear the advice to avoid debt at all costs. But what if I told you that debt, in certain circumstances, isn't the enemy? What if debt has actually become one of the most powerful tools used by the wealthy to build and expand their fortunes? Today, we're going to explore how debt became the greatest wealth trick ever, how the rich use it to their advantage, and how, if used wisely, debt can actually accelerate wealth creation. To start, let's first look at the history of debt. Debt, in its simplest form, is the act of borrowing money with an agreement to pay it back over time with interest. Historically, debt has been viewed with suspicion by many people. After all, when you borrow money, you're obligated to pay it back. And the interest on loans can add up quickly, sometimes creating a spiral of financial stress. However, while debt has been seen as a burden by most, the wealthy have always known how to use it as a tool. The concept of debt dates back to ancient civilizations. The earliest known written contracts for debt come from Sumer, around 2000 BC. At that time, merchants and farmers would borrow money to fund their operations, promising to repay the loan with a portion of their crops or profits. But this type of debt was different from the way we view it today. The idea was to use borrowed money as a means to fund a future source of income or capital. This concept is still at the core of how the wealthy use debt today, as leverage to create future value. For centuries, debt was used primarily in the business world, but in the 20th century, a significant shift occurred. During the Industrial Revolution, there was an explosion of new technologies, companies, and innovations that required substantial capital. Wealthy industrialists recognized that using debt to fund their ventures allowed them to maintain ownership and control while still scaling their businesses. This ability to leverage borrowed money to build larger enterprises is one of the key reasons why we have seen the rise of massive corporations that dominate today's global markets. One of the earliest and most famous examples of debt being used strategically was by John D. Rockefeller, founder of Standard Oil. Rockefeller used debt to fund his rapidly growing oil empire, and he did so by borrowing from banks and using the capital to acquire competitors, expand his operations, and build his wealth. His understanding of leverage allowed him to control an industry while retaining his own wealth and assets. Rockefeller's use of debt as leverage changed the way the world viewed borrowing. Instead of thinking of debt as something to be avoided, it began to be viewed as a strategic tool to fuel expansion and growth. This was revolutionary, and over time, it became clear that the wealthiest individuals were using debt to build and expand their empires. The use of debt in wealth building is not confined to just the business world, however. In the world of personal finance, debt has also become a key strategy for many wealthy individuals. Real estate is one of the most prominent examples of how debt is used as a tool for wealth creation. By leveraging debt to purchase properties, wealthy individuals are able to acquire assets that generate income while using someone else's money to do so. Instead of using their own capital to buy properties outright, they use mortgages to finance the purchase, leaving their money free to be invested in other ventures. Real estate investors often use debt to leverage their investments. By borrowing money to finance the purchase of a property, they are able to use their initial capital to acquire more properties. As the properties appreciate in value and generate rental income, the investor can pay down the debt and continue to accumulate assets, all while minimizing their out-of-pocket expenses. This type of strategy is known as using other people's money, OPM, and it's one of the core principles behind wealth building in real estate. But it's not just real estate where debt can be used to create wealth. In the stock market, margin trading allows investors to borrow money to purchase more stocks than they could with just their own capital. While margin trading carries significant risk, it also provides the opportunity for investors to magnify their returns. For instance, if an investor borrows $10,000 to purchase $20,000 worth of stocks, and those stocks increase in value by 10%, the stock market isn't the only place where debt is used to generate wealth. Credit cards, student loans, and other forms of consumer debt have also become tools that the wealthy use to leverage their purchasing power. While these forms of debt are often seen as dangerous for the average person, wealthy individuals use them strategically to earn rewards, increase cash flow, and build credit. The key difference is that the wealthy understand how to manage their debt and use it as a means to increase their wealth, while the average person often struggles with high-interest debt that eats into their finances. fact, many of the wealthiest individuals today, such as entrepreneurs, tech moguls, and investors, have built their fortunes by taking on calculated risks and using debt to fuel their growth. They understand that borrowing money allows them to take advantage of opportunities and scale their businesses faster than if they were relying solely on their own funds. For example, Elon Musk, the founder of Tesla and SpaceX, has famously used debt to finance some of his biggest ventures. Musk borrowed significant sums to fund Tesla's expansion, and he has been able to repay those loans as his companies grew in value. This ability to take on debt and use it strategically has helped Musk become one of the wealthiest individuals on the planet. But debt is not just about borrowing money. It's about borrowing at the right time and under the right conditions. Understanding how to leverage debt effectively is what separates the wealthy from the average person. While most people avoid debt out of fear or lack of knowledge, the wealthy embrace it because they understand that the right kind of debt can open up opportunities for wealth creation. The difference lies in how debt is used. So how can you, as an individual, use debt as a tool for wealth building? The first step is to shift your mindset around debt. Instead of thinking of debt as something inherently bad, start to think of it as a tool that can help you reach your financial goals faster. Of course, it's important to use debt responsibly and only borrow when you have a clear plan for repayment and a means to generate income from your investments. The second step is to look for opportunities where debt can be used to leverage your investments. For instance, consider using debt to purchase real estate or start a business. Done correctly, borrowing money can help you scale your investments without having to use all of your personal savings. Just be sure to do your due diligence and make sure that your investments are likely to generate enough income to cover the debt payments and still provide you with a return on investment. Another important step is to understand the different types of debt available to you. Not all debt is created equal, and some forms of debt are more favorable than others. For instance, mortgage debt is often considered good debt because it's backed by an asset-sure home. Similarly, business loans and student loans can be used to invest in your future, whether that means purchasing a property or gaining new skills. On the other hand, high-interest credit card debt or payday loans are examples of bad debt, as they carry high costs that can quickly spiral out of control. Lastly, make sure that you have a solid plan for managing your debt. The key to using debt effectively is ensuring that you have a strategy in place to pay it off in a timely manner. Whether that means making regular payments, refinancing at a lower interest rate, or using your investments to generate income that covers your debt obligations, having a clear repayment plan is essential for maintaining financial health. The idea of debt being a wealth-building tool may seem counterintuitive to many people. After all, we are often told that avoiding debt is the key to financial freedom. But the reality is that debt, when used strategically, can be one of the greatest wealth tricks ever. It allows individuals to leverage their resources, take on larger investments, and scale their wealth in ways that wouldn't be possible with just their own capital. The key is understanding how to use debt effectively without falling into the trap of high interest, unmanageable debt. In conclusion, debt has evolved over time from a burden to a tool that can significantly accelerate wealth building. The wealthy have mastered the art of using debt as leverage to create more wealth. And with the right mindset and strategy, you can do the same. By using debt to fund investments that generate income, the wealthy are able to scale their fortunes without giving up ownership or control of their businesses or assets. It is time to rethink how we view debt and recognize it for what it truly is, one of the greatest wealth tricks ever.